Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. So it's a big day for the precious metals, big day for silver. A day that we're going to be talking about for a while, I believe. Silver today smashed its nominal record all-time high price. Here you can see currently we are trading above $50 an ounce. Silver spot price rose as high as $51.23, setting a new record all-time high. But I do believe this move is just beginning. This is in fact the start of the next phase of this precious metals bull market. But there are some interesting things going on in the markets right now, aside from the record all-time high price. I want to break this down for you real quick, though, into a higher resolution chart. Let's go to the 10-minute chart, and you can kind of see the battle that took place here as we smashed through that $50 record all-time high. You can see it only took a span of about 10 minutes. There was a brief battle there, and then boom, soared, correction, retest, soared up higher. Looks like we're retesting 50 again. That's fine. Could silver drop below $50? Yeah, sure, I suppose anything is possible, but this is the type of move that is going to begin to draw the attention of retail investors to the public, and demand for physical bullion is about to accelerate significantly. Now, another factor I want to discuss is the backwardation that we are seeing today in silver and what this implies. If you do want to buy some bullion before we head to $70, $80, triple digit silver, which I believe is coming, make sure you check out SD Bullion. They've got some great sales. You can still get junk silver at spot. But look at this, a Johnson Matthey 100 ounce bar on their deal page, 149 over spot. What's up with that? Why is junk silver cheaper than 100 ounce bars? Well, I think it may have something to do with this backwardation. What backwardation is you can see we've got the silver futures price right over here, which is currently trading at 48.23, below the spot price. Now, that's an unusual situation. It doesn't happen that often in silver. I mean, periodically we do trend into this, but what this implies is that there is a sharp demand for silver right now, not at some point in the future, but for having your silver right now. So what does that mean? Well, I've been hearing these rumors of shortages developing. I think Mike Baloney did a video where he was showing that the Perth Mint was out of silver. Well, I just looked at the Perth Mint site. They've got some silver over there, and looks like SD Bullion still has a fair amount as well. It doesn't look like there's any shortage in the U.S. yet, but that situation with backwardation is a bit alarming, and I think it suggests that we may be on the verge of a significant increase in demand for physical, because if you want your silver right now, you might want a spot silver contract, but if you really want it, you're going to want the real thing, the physical metal. And when the public at large becomes interested and they see that silver is now above $50, and it doesn't appear that we're going to be retracing anytime soon. I mean, I think it's becoming clear now. Look at how quickly we saw silver rise to $51 once it broke through 50, that, this is not going to be a repeat of 1980. It's not going to be a repeat of 2011. We are headed much, much higher. I posted a video last night in which we compared, excuse me, the price of silver relative to other assets, right? We compared it to the Dow, we compared it to the M2 money supply, and basically the consensus is that silver remains incredibly cheap at today's prices. I mean, just think about this. If you watched the video yesterday, you've already seen this example, but it bears repeating, right? The $50 high in January of 1980 in today's dollars, according to the CPI, is over $200. So are we headed to triple-digit silver now that we broke through the record all-time high? Yeah, I believe we are. I think that it's a no-brainer, and I think that, by 2026, by the end of 2026, we may be at triple-digit silver, maybe much higher than $100. I mean, that's just my forecast. It's speculation. It's not financial advice. Don't go out there and bet the farm unless you were going to do that anyway based on your own due diligence, but don't do it based on my forecast. However, feel free to bookmark this video and come back in a year and check it, and we'll see where the silver price is, because I suspect it is headed much higher. That is confirmed, I think, by this chart, which we've been looking at quite a bit lately. The cup and handle formation, which goes back to the previous record all-time highs of 1980 and 2011. Now that trend line right there, we just broke through it, right? We just broke out of this pattern. Essentially a close today above $50 will confirm that, but I have no doubt in my mind that we have broken out of this pattern now. It was already looking like that when we surpassed this trend line in the high $30 range, because this was the highest quarterly close on record. Here at the end of September, we had the highest quarterly close above that line. And now look, in short order, we've taken out the $50 level. This implies that we are headed to triple digit silver. You should be basically making up the same distance between this bottom and the breakout level. So say between $3 and $50. And on a logarithmic chart, that's going to take you well above $100. So, you know, I'm still stacking. I'm actually still stacking. I'm hoping we get a pullback. I'm hoping silver doesn't stay above 50 bucks. Personally, I'd like a pullback. I've been stacking all along. If you've been watching the recent videos, you know that. I was stacking at 45, I was stacking at 47, and all dips from here on to the peak, which we haven't come anywhere near yet, are going to be short-lived. That's my belief. And they may be sharp. There may be sharp corrections. Silver can go up fast, it can come down even faster. So, I mean, you know, could we retest 40? Sure, it could happen. If we do, I'm going to be backing up the truck personally. I mean, feel free to leave a comment or put it in the chat what you would do if silver dropped to 40. I would be counting my lucky stars, but I don't think we're going to get that pullback. My forecast is that it's much more likely we maybe consolidate here briefly, maybe a slight pullback, and then we're taking off to further new record all-time highs. I mean, look at gold. Gold is above $4,000. Silver is above 50. The gold to silver ratio is still above 80. We're headed much higher. There is no doubt in my mind, personally. It's not financial advice, of course. However, we are seeing, it is an odd day in the markets as silver breaks out. And of course, you know, you would kind of expect it to be, right? But we've got the backwardation situation, which suggests there is perhaps a shortage, perhaps a demand for immediate silver delivery. We've also got the miners having a fairly sharp correction today. I mean, not a huge move to the downside, but given the fact that silver is breaking record all-time highs and was up almost 4% earlier in the day, the fact that the SILJ Junior Silver Miner ETF is down 2.33% might give you some pause here. What this implies, I think, is that investors believe that silver has topped. They think that silver is headed lower from here. It's going to be a repeat of 2011. It's going to be a repeat of 1980. The silver price is going to drop lower from here. It won't sustain these higher prices, and therefore the miners are not going to be as profitable. I couldn't disagree more. It looks like the uptrend in the GDX here, which is also down over 3% today, remains intact. In fact, I don't know when I even drew this trend line. I must have drawn this at some previous time, but it looks like we're maybe retesting that and heading then much higher. This green line represents the previous record all-time highs in the GDX ETF dating back to the 2011 peak of the precious metals market. But think about this. I mean, previously in 2011, the GDX, the senior gold miners, they topped out around 67. At that point, the price of gold was around $2,000. Today, the price of gold, even with today's correction, is over $4,000. Think about that. Today we're having a pullback in the price of gold, and it's still over $4,000. So the pullback is to $4,015. That's pretty remarkable. And you know, the GDX here is at 76 bucks, with the gold price being more than double what it was at the previous high for the miners, which was $67. So I believe that the miners, as well as the metals, are going to be heading much higher here. We're about to see a big change in the metals. What's going to happen is that now that silver has taken out its previous nominal all-time high, and, you know, again, maybe there'll be a pullback, maybe it'll trade sideways for a few days. I think within the week or two, we're going to be up to, you know, mid-50s, maybe 60 bucks in silver. And that's when it's really going to dawn on the public, hey, this is different than 1980 and 2011. You know what else is different? 1980, U.S. debt levels, $1 trillion, 2011, U.S. national debt about $14 trillion. Today, 37.8, right? So if silver hit $50 in 1980 when the U.S. debt was $1 trillion, and then it hit $50 in 2011 when the U.S. debt was $14 trillion, how high is it going to go when the U.S. national debt is $37.8 trillion? And there is a global trend of de-dollarization, right? In 1980, you had decades of foreign buying of U.S. treasuries still ahead of you. In 2011, China was still the biggest buyer, foreign buyer of U.S. treasuries. Now, those foreign countries, that demand has dried up for U.S. treasuries, right? We continue to rack up more debt. The deficits are exploding. They are moving up at a record pace. We're at $37.8 trillion in debt. We're heading for 38 easily by year end. Who knows? Maybe 39. I mean, this government shutdown thing it's all political theater. It's simply, just to distract you from what is really happening behind the scenes, which is that the dollar is potentially on the verge of losing its world reserve status as the world de-dollarizes and as they move to gold. Just this past August, central banks around the world picked up an additional 15 tons of gold, not silver. I mean, who knows? Maybe they're secretly buying silver behind the scenes. No evidence of that yet, but they did pick up 15 tons of gold. You did have recently the Saudi Arabian sovereign wealth fund. They began investing in silver, right? They bought the SLV ETF and the SIL silver miner ETF. So we know the interest is brewing out there for metals. Russia, last October, they announced that they were going to begin buying silver in their state investment fund. And that was the first time they had ever announced that. So we're seeing these nations, specifically the BRICS nations, Russia, China, Saudi Arabia has been invited. They're a little ambiguous as to whether they're members, but they're still investing in silver, and they're still de-dollarizing, right? I mean, we've been covering this on this channel for years now, the process of de-dollarization. We've seen the global energy trade shift to non-dollar currencies, right? We had India buying oil for rupees. We've had China settling natural gas and oil payments in renminbi. The petrodollar system is on its way out. The U.S. dollar is devaluing. The U.S. dollar has been in its pure fiat form for about 50 years now, a little over 50 years, so 54 years, I guess, dating back to 1971. Let's look at the chart of gold. So this is the 3-month chart of gold. Here is 1971. This is where Richard Nixon ended the convertibility of the dollar into gold, right here. Gold was $35 an ounce. Here we are 54 years later, and the price of gold is over $4,000 an ounce. This is the real level of inflation. This tells the real story. The CPI is not real. The CPI is fake. It's designed to understate inflation, right? It's like, I think Peter Schiff says it's like a kid filling out their own report card. So government inflation data is not to be trusted. What you can trust is the price of gold. The price of gold tells you that the dollar is in a lot of trouble here. And I mean, just look at this uptrend, right? It's, yeah, sure, it's not like a perfect uptrend, but the trend is clear that the dollar is devaluing and that real money holds its value. Now, silver has not really kept up thus far. Yeah, it's still a lot higher than it was in 1971 when it was trading, around $1.50, I guess. And but it hasn't really kept up with gold's level of appreciation. The gold to silver ratio is still very high. That means that silver has a lot of catching up to do. And the first step is what we're witnessing today, right? We needed to take out that $50 level. Now I'm looking at the price now. We're below $50 right now. We're at $49.98. Not financial advice. I view dips as a buying opportunity. Silver was $51 earlier today. I don't think we're going to get some big correction. This might be as good as it gets. This might be our last opportunity to get the sub $50 silver. That was actually the name of my last live stream was the last chance to load up on a dip. That was this red candle, right? We were doing that live stream while silver was in this red candle. I said, this is going to be your last opportunity to get silver below 50 bucks. And then, look, 2 days later, boom, we're over $50. Again, yeah, we're slightly below it now. I had anticipated that we would see a battle at $50. I don't think we're going to get that anymore. I mean, it would actually be good for the bull market if we could get silver to cool off a little bit here. If it could trade sideways and consolidate, that would help set it up for a sustainable rally above $50. It's no surprise that we are back below $50. Look at the angle of the ascent here. It was back in August, we were trading in the $38 range. It's October, and we hit 51. This ascent has been rapid, and this is a preview of what is coming in the future. The ascent thus far has been rapid. This is nothing compared to what is ahead. This is going to be going on for a while. We are still in the early innings. I think that maybe, this sign that the silver and gold market are in sustainable bull markets, the breakout to record all-time highs. First gold broke its, now silver broke its, then gold recently broke its inflation-adjusted high. That's coming for silver. That's going to be when silver crosses, the $200 mark at some point in the future, which, look, you can look at these markets and you can try to assign price targets, but it's a tricky game when you've got rapid fiat debasement and rapid fiat devaluation, because silver could be $10,000 in a decade, but that might only have the purchasing power of $200 today. So that's the same as silver getting to $200 today, right? When I say silver and $200 and $2025, maybe that's $10,000 in $2035. So, it can be hard to name a nominal price for silver. But one thing I am convinced of is that silver remains very inexpensive relative to other assets. If you check out the video I put out yesterday, there's some charts on there where I demonstrate that, silver, if you wanted to get the same Dow to silver ratio that you had at the 1980 peak, the silver price with the Dow, where it is today, would need to be $2,000 an ounce. And, obviously that sounds fairly extreme. I'll give you that, that $2,000 is a lot. That's, a huge percentage increase from where we are at today. But the extent of fiat currency creation is more shocking than any price target you can name for silver. I think that, there's a lot of normalcy bias in the West. If you live in the US, you're like me, you're born into the era of fiat currency your entire life. There has been this fiat currency regime which has been the de facto currency of the entire world, right? The dollar is a purely fiat world reserve currency. And we've never seen anything different. I've never paid for my groceries with gold or silver coins. There are some of you out there maybe who are still around who remember paying with gold. I mean, you'd have to be pretty old. You'd have to be pre-1933 to recall that. But I don't know, maybe some of the viewers recall that time. Probably a lot of you remember paying with silver in the form of pre-1964 90% U.S. silver coinage. But there's a lot of people alive today who that, at the best, that's a foggy memory, right? And we've become so accustomed to this system where the entire world is based on these fiat currencies that have nothing backing them except the promises of governments and politicians and central banks. And again, if you want to know how that's worked out, all you have to do is look at the chart of gold, right? The long-term chart of gold. That's what happens when governments are enabled by a central bank to create limitless amounts of currency and try to paper over the financial problems that their policies have created. And now we're finally entering sort of the end game here, right? We're finally entering the terminal fiat phase, and that's why you're seeing silver breaking out of this chart. I mean, the technicals line up with the fundamentals here. This chart implies silver is about to blast higher. This number implies that vast amounts of fiat currency are going to be created by the Federal Reserve and by central banks around the world, right? It's a race to the bottom among these fiat currencies. And we're ripe for a financial crisis and massive Fed intervention. It hasn't even happened yet. All that has happened is that the Fed has made one 25 basis point rate cut, and you've got silver breaking out. What do you think is going to happen when the Federal Reserve returns to quantitative easing or cuts rates to zero in an emergency? The price of silver is going to hit triple digits. And physical silver at that time, well, if you want to get it, you probably need to get it now, because at that time it's going to become prohibitive to obtain. So you want to have those positions in place. Yes, $50 maybe seems like a lot to pay for a 1 ounce silver round. For me, it'll be the most expensive silver round I ever bought. But I do plan on continuing to stack as we head higher, because I don't think that the top is in at all in this metals market. All the indicators suggest that, right? We're seeing confirmation among the other metals. Yeah, again, the miners selling off today, that's fine. Probably an opportunity to get in there and accumulate some more of those, because they're still very high. Even if the GDX is down 3% or the SILJ is down 2.58%, nothing goes up in a straight line. But the metals, I think, are going to come pretty close when this next phase of this rally really kicks off. How high are we going? I don't know. 2026 forecast, I think $100 silver, possibly $5,000 gold. I mean, I think $5,000 gold is conservative. That's not even that big of an increase from here. I do think that silver is going to outpace gold as this next phase kicks off, but the numbers are going to shock people. And, it's interesting. There's not a lot of coverage of this. I haven't really tuned into the financial media today specifically. I've been on alternative media and social media thus far, but I suspect silver's breakout is not being covered. I mean, if you're watching Bloomberg or CNBC or any of these business type channels, feel free to put a comment or leave it in the chat if you're seeing them cover silver, but I doubt they are, because this is still a stealth bull market, right? And eventually that's going to change. It's changing a bit for gold. 4,000 gold, they're having a hard time ignoring it. They're having a hard time just talking about Bitcoin when gold is over $4,000. But silver, silver is such a small market compared to gold. So many more investors have exposure to gold than have exposure to silver. It's a tiny, tiny market. And when money starts flowing into it, there's not very much silver out there. Even the paper silver markets are tiny compared to gold, but the physical market, it's minuscule. An entire year's worth of silver at the spot price right now, its record high, is about $50 billion. That's a drop in the bucket. One billionaire could wipe out an entire year's production of silver. And you know what kind of chaos that would create in the market? I'm not saying that's necessarily going to happen, but the stage has been set here for massive silver appreciation. Silver's been in a structural deficit for years. Hundreds of millions of ounces of silver have been consumed that aren't being replaced. And there's a lot of fiat currency out there. That supply is growing endlessly. So a breakout above $50 was inevitable. We're down to $49.77 right now. It's interesting when the pullback in silver is to $49, right? We're having a pullback in silver and it's at $49.77. We're having a pullback in gold and it's at $4,012. This is a new paradigm. Things are about to get very interesting in this metals market. Leave me a comment down below to let me know what you think about silver's trajectory. Are we going to see triple-digit silver? Will we see triple-digit silver in 2025? I haven't ruled that out. I think 2026 is probably a more likely candidate. Also, I do want to point out at the beginning of September, I forecast that by the end of September, we would hit $50. All right, it's October 9th. I was 9 days off. Going to give myself a pat on the back for that one. Not too much. Don't want to be annoying about it. But look, silver's headed much higher. I can't tell anybody what to do. I don't give financial advice, but I'm going to keep stacking. So leave me a comment down below to let me know what you think about this. Thanks for watching, everybody. Share this with your friends. They're going to start paying attention soon. Might as well hear it from you first, right? Share this with your friends. Share it with people you care about. Share it with people that need to learn about sound money. Thanks for watching, everybody. Stay safe and happy stacking. I will catch you next time.